Welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Well, the bears have taken control of the narrative and the market, not only at home, but in global markets as well. If you look at the Nifty and Sensex, they started off in a very strong note, but throughout the day, they have bit by bit given up their gains and are now trading near the flat line, largely because US stock futures have also tumbled quite sharply earlier in the session, down about 300 points at one point of time. If you look at the US 10-year bond futures, they jumped very sharply, almost 10 basis point up move on the 10-year yield, Santo. Surprising given that yesterday the yield had fallen almost 20 to 24 basis points. Apart from that, if you look at if you look for signs of strength in the market, that is clearly coming from the mid and small cap space, Santo, and defensive names like pharma. Pharma is the one that is showing a lot of resilience at this point of time. Even IT has taken a little bit of a knock today, but pharma stock continue to go from strength to strength.
So one of the reasons probably why investors are heading into pharma, A, of course, the defensive nature, B, to some extent the weak rupee will help many of these companies. There's a benefit in that. And lastly, the stocks have been underperforming for quite some time. They are, to use a term which is actually a misnomer, they are under-owned. And why I call it a misnomer is because at any point in time somebody is owning the share. So when you put together all these factors, you can see why pharma shares have been holding well. But that said, I think bulls seem to be finally realizing the hard lesson that there is after all a link between interest rates and the performance of equities. Although in the short term that can be broken, but as the events over the last couple of days have clearly shown, rising rates is always a negative for equity markets. But for now, bears are clearly having the upper hand. They seem to be in no hurry to cover up their short position. At least that is what today's trend seems to indicate. They are in no hurry, given that bulls seem to be all the more desperate to somehow unwind their long position, and they may not be in a mood to take up big positions going into the new expiry. I think clearly at this point it is advantage bears, I would say, and all eyes are now on the earnings season beginning next week.
Yeah, clearly, Santo, I think the entire focus of the market probably in the next couple of weeks will turn towards earnings. Macro has dominated this inter-earnings period, but I think going ahead, earnings and management commentary will become very crucial. That said, let's quickly move on to some of the stocks that were buzzing in trade today. Starting off with a very strange name.
Strange name because that's been mostly on your list of favorites, and that is IRCTC. So the stock has been pretty firm today, up close to about 2%, and most likely it seems to be a case of covering of short positions. There's been a lot of huge short positions built into the stock during this expiry cycle. The other point is that till about last month you had seen a lot of outstanding short positions in the NSE's SLB
as well,
stock lending and borrowing mechanism window, which we call it. That number has also come down considerably. And thirdly, if you look at the June quarter numbers, they were quite blowout, and we can expect a similar trend in the coming not this quarter, but the coming quarter. And one of the reasons being that high airfares will obviously prompt a lot of people to switch to trains.
Yeah, like me.
Probably.
Well, Santo, I think if you look at the stock, yes, today's probably up move can be explained by the short covering that we are seeing. Also, not only in the future segment, but also in the SLB segment, because let's not forget that in the SLB segment, the contracts generally tend to expire on around the first Thursday of a month. So clearly that date is upcoming. So you would expect a lot of traders who have taken short positions there probably return a lot of those shares after covering them. So I think it has played out quite well for the bears. And if you look at the technical charts also, Santo, it looks like that momentum is likely to continue on the downside. I think any sort of upside at this point of time on this counter seems to be sold into, and people are utilizing it to either book profit or cut their losses if they have been holding it from a high level. And if you look at the momentum indicators such as an RSI, which is sitting around 45 odd level, which clearly indicates that the momentum is quite weak in the stock. You're not seeing that sort of a momentum where this uptrend could continue going ahead, Santo.
Well, stock exactly has not been in a downtrend, CJ. It's done pretty well over the last couple of months, at least from a low of about 570 in early July. The stock is now sitting pretty comfortably at 680 levels. So I'm not sure if, let's say, if you were to take a 2 to 3 month period, you could exactly say it's in a downtrend. Yes, it's come off considerably from the April highs when it had crossed crossed over 800 rupees. And that said, there's another positive also, which according to Edelweiss, the inclusion of IRCTC in the Nifty Next 50 could probably help the stock attract close to about $27 million.
Could be a trailer to an inclusion into the Nifty maybe.
Maybe, but in the short term, definitely it could attract about $27 million of.
Doesn't seem like that big a quantum, Santo, to really move the stock for a.
But definitely does improve the sentiment for a stock which not long back had been on the short sellers list. I would look at it that way.
Well, that said, the first stock on my radar today is Tata Motors from the auto space. The stock clearly was among the top gainers, but it has given up a lot of the gains largely because of the the turn in sentiment that we have seen in the market. But if you look at Tata Motors, Santo, yes, JLR of course is a different story because of what is happening in the global economy. But at home, the recent launch of Tiago EV, the the hatchback version that has been launched by a company, that has really made a lot of analysts quite happy. They feel that this car has the potential to become the best-selling electric vehicle in India so far, and that is the optimism that is being built into the price also today, and you can see that in the action earlier in the day. Apart from that, Jeffries came out with a note and said that with the launch of Tiago EV, Santo, this could really be a trigger for Tata Motors to gain even more market share in the electric vehicle space or EV car space going ahead. So I think domestically, we know that the passenger vehicle side, the ICE side or the traditional passenger vehicle side has been doing quite well for Tata Motors. It has been gaining market share there. And now with the EV launch as well, I think things, at least as far as India is concerned, are looking quite rosy.
Well, CJ, you just mentioned that JLR is another story, but I think at this point for the market, JLR seems to be the big story given that overseas earnings account for a significant chunk of consolidated profit numbers for Tata Motors. Now, the EV story, just look at the local side of Tata Motors business, both the CV as well as the passenger cars.
Yeah.
On the passenger car front, it's been making all the right noises. Yes. The Nexon series has been a blockbuster for as far as Tata Motors is concerned. But that is not really what the market seems to be excited about. I'm thinking going purely by the price moves in the stock. Tata Motors has been one of the underperformers in the auto sector. All other stocks have done well. It did do very well from its lows of March 2020, but as I've been repeatedly pointing out, after the stock went to close to about 500, it's been struggling ever since. It's been underperforming, and for now, I think market still is waiting for some clear signs of improvement in the company's bottom line. The company has been posting losses for quite a few quarters now. Ambitious targets which the company has set for itself, becoming a net zero debt company and all that, but market for now doesn't seem to be so enthused by that, and that is what the price performance seems to be showing. And when you consider that it's also been underperforming the overall auto sector for some time, I wouldn't be too excited about Tata Motors at this stage.
Well, Santo, I think that is the dichotomy when it comes to market. You sometimes tend to not reward players who are actually showing performance, but tend to reward players who are only giving you hope. And I think that is how I look at the story of Maruti Suzuki and Tata Motors at this point of time. Yes, the JLR business is there, that is an overhang. But if you look at the the performance of the India domestic business for Tata Motors, it's been going all guns blazing. Whereas on Maruti, we have not seen any evidence yet of any sort of revival. But the market is rewarding Maruti more because Tata Motors has already priced in a lot of those positives. So I think yes, probably it's not performing as great as Maruti, but I don't think that is the reason to probably junk this stock at this point of time.
Well, CJ, simple mathematical argument to that one. All said and done, you're still getting Maruti for about 60 times trailing 12 months P, whereas you're getting Tata Motors at infinity P, given the fact that it's not making any money. So tell me, who is the market value?
Well, Santo, you should, people in market always look at forward earnings, so I will not comment on trailing earnings at all.
Well, next stock on our watch list is Aurobindo Pharma. Now, this has been one of the big laggards in the pharma sector, and for good reason. The margins have been under pressure for quite some time now. The US part of the company's business, which is more than about 50% of its overall revenues, that's been under pressure, which is why the stock has been underperforming. Besides, there are some other issues also. The market was concerned about corporate governance issues regarding one of its recent acquisition, and the stock has been punished for that. Now, but have all the negative news now been fully factored in at these levels? According to Edelweiss, the stock is available at close to about 11 times FY24 estimated earnings, and that's just one part of it. But on the other side, Aurobindo is trying to kind of offset the pressure on its US business by increasing the number of launches. Besides, it is also bolstering its R&D into biosimilars. There are 2 filings, one is expected in late FY23 and the next one is expected in early FY24. So, a lot of negativity around the stock at this point in time, but there are some other positives also. The company has managed to almost halve its borrowings, and huge borrowings at that, over the last 3 years. At this point, a lot of pessimism around the stock, that's for certain, but in this kind of a market, probably, as we have been saying earlier also, the trend is to go in for stocks which probably nobody has any more of it left to sell.
Yes, Santo, if you're looking for a mean reversion play, clearly please go ahead and I think buy Aurobindo Pharma at this point of time. But I just feel that as far as earnings performance is concerned, if you're looking for that, I think that is somewhere something where investors might continue to face disappointment, because the US earnings, US market still remains a major chunk of earnings, and there things are not looking good at this point of time. It's not only that the company has not been able to launch any blockbuster or many blockbuster drugs there in the recent past because of the regulatory issues many of its units have been facing, but also currently price erosion is the name of the game in the US market, and that will eventually start hurting the margins and profitability of the company going ahead. So for me, I think Aurobindo, probably once it diversifies its business even more, is trying to get into EMs and other sort of places and biosimilars. Maybe once that evidence comes in, the stock will become attractive given the valuation at this point of time. But for me, even on technical basis, the stock is exhibiting a lot of bearish momentum, and that momentum most likely will continue in the near term for me.
Well, on the positive side, CJ, the company has retained its guidance of about $650 to $700 million from injectables over the next 2 to 3 years, and this is also a sizable portion of its portfolio. Close to about 24% of its sales come from there. So not all hope is lost.
Yeah, maybe if they can probably ramp up that side of the business, maybe that will probably help reduce the dependence on the generic side or the export generic side. But we will have to wait and see what sort of commentary comes in after the second quarter, because almost half a year would have passed and the management would have a greater visibility as far as revenue performance is concerned for the rest of FY23. Then the last talk on my radar today is from the chemical space, and this is SRF. Well, I think SRF by now has gained the reputation, Santo, of being probably the HDFC Bank of the specialty chemical space, or the HUL of the specialty chemical space, because the company's compounding of earnings of stock performance has been quite spectacular over the past 5 to 10 years. Now, even today, even in a weak market like today, the stock was exhibiting a lot of strength, and I think that is something that will boost investor confidence going ahead for the company. Apart from that, the view out there is that the new capex that SRF is going to do going ahead will help it not only grow its volumes, but also capture a lot of market share in the specialty chemical export business. Now, specialty chemical is, of course, the key trigger here as far as SRF is concerned. And for Morgan Stanley, SRF is the top pick when it comes to specialty chemicals named Santo, and it is expecting an upside of as much as 42% over just the next 12 months. So, despite all the rally that we have seen in SRF, that new capex that the company has announced has clearly boosted the sentiment of the market.
Well, hard to argue against this one. SRF has clearly been an outperformer in the chemical sector, and fundamentally too, if you look at the quarterly earnings, and it's hard to pick holes in your argument, CJ. So rather than make a case against SRF, I would cede the ground to you on that.
Thank you so much.
Tata Chemicals, the last stock on our watch list this afternoon. A good performance by the stock again. It did come under pressure in the last couple of days, but on the whole, it's been finding a good support around 1,000 rupees. The simple play here is the tight situation in the soda ash market, and Tata Chemicals is the third largest player globally in soda ash, and at this point in time, it's being helped by strong demand for soda ash, and at the same time, limited supply, and that is what is driving investors to the stock. You also saw some really good first quarter numbers, ever since which the stock has been re-rated by the market. That's when you saw a real jump in the stock price. Also, the expansion into specialty molecules, that's going to be specialty molecules which is going to be used in batteries, solars, green hydrogen, all this which are key to India's energy transition. That's being looked at the next major trigger. Besides, Morgan Stanley is bullish on the stock and recently upgraded the stock.
Well, Santo, I think it's very hard to argue for the near-term earnings trigger as far as Tata Chemical is concerned. At this point of time, things are looking quite good, both on the revenue side as well as on the margin side for Tata Chemicals. So this is one stock that I think will continue to get a lot of traction for investors going ahead. And also belonging to the specialty chemical side in general, I think this is one segment of the market where it's almost becoming recession proof in that sense, because I think while the global pie of chemical may not be increasing, I think the players who are becoming more dominant or less dominant is of course something that the market is playing at. The receding role of Chinese companies within the specialty chemical space and the ascension of Indian companies is something that the market is really looking at this point of time, and therefore I think we are not seeing the sort of correction that a specialty chemicals company would have merited given the fears around global recession.
Well, with that, let's take a quick look at the market before we move into the next segment. And Nifty is slightly up at this point in time, up about 16 odd points. Some bit of late short covering coming in.
Yes, Santo, but if you look at the mid cap space, I think the Nifty small cap the chart will come up just now, and I think small cap and mid cap are exhibiting a lot of strength at this point of time in the market.
A lot would be a little hard to say, no, CJ?
Yeah, I mean compared to compared to the benchmark index, the small cap 100 index is up about 0.7%, almost nearing on almost 1% gain. For a market like this, for an environment like this, I think that is quite considerable. Also, let's not forget that a lot of the small cap index don't get any sort of benefit from technical factors like short covering and those sort of things. So this is clearly pure cash buying at this point of time. But it will be very interesting to see, Santo, how the market will shape up tomorrow. I mean, we have a very, very important event tomorrow coming up, and we'll touch upon it later. But I think the small and mid cap may remain the dominant theme, while large caps will continue to face a little bit of pressure.
Well, just a bit of correction there. The Nifty is actually under pressure. It is down about 36 points. It's the Nifty futures which were up close to about 16 points. Well, and what are we keeping an eye out for other than the big event you just mentioned?
Well, I think, Santo, that is the first thing. That is the first thing, of course, that the market will be looking out for. Tomorrow morning, the MPC's outcome will come out. Now, the expectation is clearly that the MPC will indicate a 50 basis point rate hike, which will take the repo rate somewhere around 5.9% at this point of time. But I think the more crucial part of the policy will maybe come during the press conference of the RBI governor, because there would be a lot of questions around the liquidity management, around the forex issue. We know that rupee has been plumbing record lows all throughout since the last meeting happened, and also the banking sector liquidity has been in the deficit zone, although it recently returned into surplus area, but it has touched that deficit zone, and that has also created a little bit of issue in the money market. So I think it's going to be probably one hell of a monetary policy tomorrow, and it will probably dictate how the market behaves in the next week.
Well, that said, for banking stocks, to some extent, higher rates help bank, because a lot of the bank's loan book is tied to floating rates, a good part of it. But when it exceeds a certain point, then also it's trouble, because it could then affect fresh borrowing. Not to mention the mark-to-market losses on the bond.
Yeah, I mean, we would probably be sitting at almost 190 basis point of rate hike. Now, if you remember, Santo, when the first rate hike happened in May, the industry opinion was that home loan rates could still rise by another 100 to 150 basis points without affecting demand. Now that we have probably will cross that threshold, it will be interesting to see what will be the incremental demand for housing loan, because housing loan has been a very, very key component of the overall lending growth that we have been seeing in the banking sector. So very interesting time going ahead.
And not to mention the fact that property prices are still quite high.
Yes,
so you have high property prices and you've got high interest rates. Well, with that, it's a wrap on this edition of Markets with Santo and CJ. I hope you enjoyed watching it, and please do remember to share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.